Hello then, good afternoon from a freezing cold London where there are many political shenanigans going on here, what with Boris Gate and Prince Andrew and goodness knows what. But behind that, the headlines, which have not really become the headlines, is that inflation has risen now to the highest rate in 30 years in London, which has now hit 5.4%. So it's still going up. Possibly due to supply chain issues, soaring food prices, soaring fuel prices, prompting fears that the Bank of England could again raise interest rates maybe as early as next month. Now, central banks are saying, well, it's transitory. In fact, last summer they were saying it was probably temporary, then it was transitory. Others feel that inflation could run rampant in economies for quite a while, and some see that even currencies could be even devalued rather, as inflation spirals. We know that there are a lot of fiscal and economic uncertainties with all the money that's been created and pumped into the market, but this is being drawn back now by the Federal Reserve. We're seeing, huge rises in housing costs in the last year in both the US and in the UK, and that's all added to people's costs. So some say that base rates here could rise to as much as 0.5%, which is, it doesn't sound a lot, but from virtually being at zero, that's quite a bit. That is many times more than it was just a couple of months ago. So that could start to hit people in their pockets with perhaps the higher mortgage costs. It's going to hit the government with higher payments on their debt. People with loans or types of loans that are on a variable rate will be hit by these things. But savers and people with money to invest will benefit from higher rates. And really, the rates have been kept artificially low by governments and central banks, perhaps because they then will not have to pay higher rates on their own debt. And inflation, I believe, has been artificially seemed to be staying low, because that would mean that they don't have to pay higher rates on inflation-linked pensions and social security payments. But there you go. We know, don't we, that prices in the shops have been going up far higher than 5%, and even in America, where inflation is 7%, prices in the shops have gone up much higher than that figure. I was talking to someone today, and she just sort of remarked, "Oh, I went to buy this bread that I usually buy. It used to be 80 pence. Now it's £1 and 5 pence. That's quite a big jump. That's not 10%. That's not 5% rather. That's more like 25%. And that's just one thing that's gone up. I know that my broadband has gone up by 10%. Packages have got smaller and prices have got higher in the shops. Sometimes you see packages reduced by 10%. Well, that's inflationary, isn't it? That is inflationary, although we don't notice it because they've slid it under the radar. So we know that prices for basic things, fuel for some people has gone up by as much as double. I was talking to a retired doctor today, and he's been very careful with his bills. He's switched energy suppliers, but two of the energy companies he switched have gone bust. So now he's with one of the main ones, and his prices have shot up. And he's got a smart meter and everything. He's a very careful guy. But there you go. That is what's happening in the world, and particularly in the UK. But it's all over. So we shall see how that will affect things in the long run. We know that printing money in the past and pumping a lot of money into the economy has created what's called hyperinflation in countries like Germany, Argentina, Venezuela. I don't think it will get that bad, but we shall have to see. The UK is expected to grow faster than most of the other G7 economies as it comes out of the pandemic, stronger and leaner, and with the economies more open than other countries, especially in Europe. This comes from a report by Goldman Sachs that says that UK economy will be larger than France and Germany by 2040, mainly due to the younger demographics here, the younger age of population here, which has partly been created by immigration, I suppose. But in Germany, Italy, France have got an ageing population, falling birth rates, and that is a demographic problem for those countries. Stock markets in January have been jittery. Certainly they've been up and down a little bit, so it's falling slightly, but the Nasdaq is definitely about 10% off its high last year, and many are expecting to see a stock market correction or even a crash sometime in the near future, certainly in this first quarter. But you can never time the market, you just never know. I didn't realise that property would boom last year during a lockdown and a pandemic, but things happen. World events can take over. We don't know if the Russian troops are on the borders of Ukraine. If they move into Ukraine, what will the West do? Will there be a war? Ukraine have got a pretty big army themselves, so they're not going to just roll over. So when these things happen, when wars happen, markets can just tumble just like that. You just never know what's around the corner, as we found out 2 years ago. But property is definitely booming, and it's booming here. And I've got some friends in Ireland. Ireland is the same thing. It's booming there. There's a supply demand. Demand is outstripping supply, I would say. And agents in some parts of the country here, I was talking to an agent who works in the Greater London area, and she said she's never been busier last year, but it's still continuing. Even after the stamp duty holiday has ended, it's still going on. And she said, in terms of things like family homes, larger family homes with a little bit of land, a bit more space, she just cannot get enough of them. And those prices have just gone up to crazy levels. And inventory is still low. And sellers actually are holding out for higher prices, sometimes unrealistic prices, as I'm finding out. But flats in the city centres have not enjoyed the same growth. I'm getting messages from agents all the time saying price reduction in some of the best parts of London, in Kensington and places like that, where prices have had to drop to get them sold. They tend to be smaller flats, conversions, that sort of thing. But it's definitely, they have not enjoyed the same pace of growth. But the government have recently announced the end of Plan B, so this work at home rule might change and more people might start going back to the offices. But I don't think there'll be a bigger demand for offices. The city have been crazy in building offices in the last few years, and I expect the same in many other major metropolises. So we might see that, yes, they'll need offices, but maybe instead of needing 5 floors, they might need 1 or 2 floors or half a floor. So it'd be interesting to see what's happening with the commercial property market. I know that some commercial developers are already reacting to that and turning their offices into to flats for more sort of mixed use usage, if you like, where you have flats, offices, maybe even a hotel floor or something like that. So they're trying to adapt to this changing market. But I think the idea that everyone's going to rush off and live in 100 miles from London and in Devon and Wales is a bit fanciful, when you might be required to come back into the office 3 times a week. That might mean you have to rent a place or buy a place in town. And also there's issues with Wi-Fi coverage in some of these rural areas. So it might not be as easy as they think to just sort of work from home and live the good life, as it were. Talking about property, can you buy property with no money down? Well, the answer is yes. And if you look at the bottom here of my notes here, and if you scroll down, you'll see that there is a special free seminar on buying property with no money down. Just briefly touch on Bitcoin, because Bitcoin has been as high as almost under $70,000. It's now languishing around the 42,000 as I speak. But who knows, by the time you see this, it could have changed again. It could have gone up again. It could have gone down again. That's why for me, it's not a credible currency, although some people might see it as a hedge against inflation or against the falling value of dollars and pounds, etc. But this has taken the shine off some of the traditional inflation hedges such as gold and silver. But silver has been rising, I think, by around 4 or 5% in the last month. The silver seems to be going up again. Don't forget, silver is not just a precious metal to look at. It has many industrial usages, including things like the technology and the battery technology that we use, and mobile phone technology. So silver is definitely one to watch. Now, again, you've got to make up your own mind. You've got to have your own advisors, your own financial advice. Don't just listen to me and say, well, I'm just going to buy silver, or I'm going to sell my stocks and shares because the market might go down. But all I'm saying is that I like silver, and I wouldn't want to have all my money and my pension fund money in stocks and shares right now, particularly in American stocks, which I think are vastly overvalued. So in this high inflation rate, how can you save a bit of money? Well, mobile phones is one way. Many people are overpaying on their mobile phone contracts. Now, I recently discovered this because I looked into various ways of buying an iPhone. I looked at just buying it. I looked at Apple financing. I looked at financing it in other ways. And then I really got back to saying, well, I might as well do what I was doing before and just roll over my contract with T-Mobile, and they just buy the phone for you, and they give you X amount of minutes, and you pay whatever per month. And I was paying something like 80 odd pounds a month, which included unlimited this, unlimited that. But then I realized after a couple of years, well, I should be due for an upgrade. And I realized that it'd been about 6-8 months since I could have had an upgrade for the same approximate monthly cost. So I called them up and they said, yeah, you're out of contract. So that means I've been paying the same amount for something like 8 months. That is the amount really that's included to buy the phone. So your mobile phone contract, if it's a SIM only, you can get SIM only deals for something like £5-10 a month. But if you're using your contract to buy the phone as well, which can be £2,000 or £3,000, then that's where they're charging you these high amounts. And what they want you to do is to keep rolling that over and just keep upgrading, as they say, to a new phone or a different phone, and then they can keep you on the hook, as it were. So it's a financing, a bit like leasing a car. But what I didn't realise is that these companies are just letting these contracts roll on for much longer than they should. They're not telling you, by the way, you're now paying too much, you could switch to a SIM only, or you could upgrade. They're not telling you that anymore. They're just letting it roll on and making more money for themselves. So I called them up, and then basically I've switched from an 80 odd pounds a month, keeping my phone, which is perfectly good. I'm using it right now, and then switching to a SIM only, which I think is going to cost me about £20 a month. So there you go. I've immediately saved something like £60-70 a month, and in some cases my bills were running even higher than that. So that's one tip. Look at your mobile phone contract. It's in my various podcasts and training. Always check your mobile phone contracts, your utility suppliers, and all these things that you've got to check. Keep reviewing them, because loyalty, as I found out myself, does not pay. Be disloyal. Ring them up and say, I want a better deal, or I can get a better deal somewhere else, and invariably they'll give you a better deal. Now, my broadband, as I said, went up by 10% recently, but about a year ago I called them up and they reduced my bill by 20% just for phoning them up. Now, getting through to Virgin does take a while, so I think it's still worth the hour or so I spent trying to get through and speak to people and give them my inside leg measurement, but it was still worth it for the time that I'd spent on that. Just having a little pop at Virgin there, because they just don't like picking up the phone, even though they're a phone provider. Now, as you know, I've launched a new book this year, Borrow and Grow Rich, which could come in handy if you're thinking about joining this No Money Down seminar, because this is about using OPM, other people's money, to get rich. You can't get rich by just saving alone. It just won't happen. You might take a lifetime to save up that amount of money, and with low interest rates, it's very difficult. So in this book, you'll discover the power of leverage, and you can download chapter 1 and 2 and 3 if you click on the link below. So have a look at this also, the No Money Downs seminar, because you'll discover how thousands of ordinary people in the UK are quietly getting rich using none of their own money. Now, this is nothing new. This has been going on for thousands of years. Sailors like Magellan financed their trips through kings and queens of Spain and Portugal. They used other people's money, and the kings and queens then just levied a tax on someone else or brought in business people to joint venture with them so they could go and discover new lands and bring back riches and gold and silver and all these sorts of things. So it's nothing new. But in this seminar, you're going to specifically find out about buying property or acquiring property or controlling property using none of your own money. Skilled trainers have been there and done it all. I've been on these courses as well. You can do this without any experience. You can learn the secrets of getting rich using buying property, controlling property using none of your own money. So you'll learn the investing principles, how to cash in on the next big property strategy to control an empire of properties. This strategy is called rent to own. So look, there's lots more there. The super rich have made a fortune by controlling assets rather than owning them. These are all great strategies to use to get rich, and not just think, well, I haven't got any money, so I can't get in on property. I can't buy a property because I haven't got any money. Not true. Do have a look at this. Register your place now. Absolutely free. And the great thing is it's virtual, it's online, so you can do it from the comfort of your own home. So thanks for listening. Have a great day wherever you are, whatever you're doing. But do get in on that, because I think it's in a few days' time. So don't miss out on this opportunity. It's actually set for Monday, so don't miss out on the opportunity. Register your place now. You've got nothing to lose and everything to gain. Thanks for listening, and bye for now.